Today, we are going to demystify a word that, let's be honest, can sound a little, well, scary. Accounting. But I want you to forget about dusty old books and boring spreadsheets. Seriously, think of it as a powerful language, a language that tells the true story of money, and we're about to get fluent.
You know the feeling, right? We have all been there. You look in your wallet or check your bank account and you just stare at it, completely baffled. You know you had money just a little while ago, but now, poof, it's just gone. It feels like a really bad magic trick where you're the only one who loses.
I mean, think about it. You start the month with, say, 500 rupees. Maybe you spend 50 on a notebook, another 30 on some pens, 100 here and there on snacks. But can you really account for every single rupee down to the last paisa? Probably not. Now, if it's that tough with just 500 rupees, just imagine a business that has hundreds, maybe even thousands of transactions happening every single day. That's when we run into a really big problem.
And this, right here, is what we can call the forgetting problem. Our brains are absolutely incredible. They're amazing, but they are not designed to be perfect, walking, talking calculators or ledgers. And when money is involved, trying to just remember everything is, well, it's a recipe for total disaster.
You see, this simple act of forgetting suddenly blows up into huge problems for a real business. How are you supposed to know if you've made a profit if you can't even remember all your expenses? How can you possibly walk into a bank and ask for a loan if your entire financial history is just a vague memory? And you definitely can't tell the tax authorities, I think I made this much. It just doesn't work. We need a system.
And that system, the elegant solution to the chaos caused by our faulty memories, is accounting. It's the powerful tool we invented specifically to bring order and clarity to our financial lives.
At its very heart, the definition is actually pretty simple. Accounting is just a process. It's a structured, methodical way of taking all the messy, chaotic comings and goings of money in a business and turning them into a clear, simple, and understandable story.
And it all boils down to a simple 4-step journey. First, you record everything that happens. Think of it like writing every little detail down in a diary. Then you classify it, putting all the food expenses in one pile, all the travel costs in another. Next, you summarize it all, adding it up to see the big picture. And finally, you report it, sharing that story with the people who need to hear it. That's it. That's the core of accounting, right there.
Now, you've probably heard a few different terms thrown around, words like bookkeeping and accountancy. They sound kind of similar, and it can get confusing. So let's clear it all up right now with a super simple analogy. I want you to think of it like you're cooking a big, delicious meal.
So, first up is bookkeeping. Think of this as all the prep work you do in the kitchen. It's chopping the vegetables, measuring out the spices, getting all your raw ingredients ready. It's just about recording the raw data, every single transaction. It's absolutely vital. You can't cook without it. But it's not the whole meal.
So if bookkeeping is the prep work, then accounting, well, that's the main event. That's the actual cooking. It takes all those chopped vegetables and spices, that raw data from the bookkeeper, and it combines them, cooks them, and plates them into a finished, beautiful meal. It's the entire process that creates the final, useful reports that people can actually understand. And finally, we have accountancy. So what's that? Well, that's the master cookbook. It's the science, the theory, the collection of recipes. It holds all the principles and the rules and the deep knowledge about why we cook things a certain way, why this ingredient goes with that one. It's the whole body of knowledge that governs the entire field.
Okay, so we've done all this work, we've prepped the ingredients, we've cooked this amazing financial meal. But who's it for? Who's actually sitting at the table waiting for us to serve these reports?
Well, it turns out there are a lot of different people at that table, and each one is asking their own very important question. You've got the owner leaning in and asking, did I actually make a profit? Then you have a bank looking at the same report, but they're asking, if we give them a loan, can they pay it back? The tax authorities want to know how much profit was made so they can collect the right amount of tax. Even the employees are looking at this data wondering, is my job secure? It's fascinating. Everyone's looking at the same set of numbers, but they're all searching for a different answer.
Okay, so when we're in that first step, recording transactions, we hit a pretty big fork in the road. There's a fundamental choice you have to make, and it all comes down to one thing: timing. Specifically, when do you actually write something down in the books?
There are two main ways to do this. First is the cash basis. This is super straightforward. You only record something when cash physically enters or leaves your bank account. Simple. But then you have the accrual basis, which is a bit more sophisticated. With accrual, you record a transaction when the business activity happens, even if the cash doesn't change hands until later. So, for example, if you do a job for a client in December, but they don't actually pay you until January, the accrual basis says you record that income in December, when you earned it.
So, which one is better? Well, you can probably guess. While the cash basis is definitely easier to understand, the accrual basis gives a much more accurate picture of a company's real financial health. And that's exactly why it's the standard for pretty much all major businesses. It properly matches the money you earned with the exact expenses it took to earn it, all in the same time period. It gives you the true story.
All right, we have covered a whole lot of ground. We know why we need accounting, what it is, who it's for, and how it works. So now, let's wrap this all up with a final scorecard. A balanced look at both its incredible strengths and its very real limitations.
On the plus side, the advantages are just massive. It completely solves that forgetting problem we started with. It gives you real control over your finances, helps prevent fraud, and it's absolutely essential for making smart business decisions. Not to mention, it makes dealing with taxes way easier and even helps you figure out what a business is actually worth. It truly brings order to financial chaos.
But, and this is a big but, accounting isn't perfect. It has blind spots. It can only measure things that have a price tag. It can't put a rupee value on the quality of your team, your company's amazing reputation, or the morale of your employees. It's also, by definition, looking at the past. It records what happened. It doesn't predict the future. So the big takeaway here is that the numbers tell an incredibly important part of the story, but they never, ever tell the whole story.
You know, there's this famous quote that just nails it, and it's this: accounting is the language of business. It really does sum everything up. If you truly want to understand what is going on inside any company, from the smallest startup to the biggest corporation, you have to be able to speak its language, and that language is accounting.
So I'm going to leave you with this final thought. Accounting isn't just about passively recording what happened yesterday. It's about actively understanding what's happening today so that you can go out and build a better tomorrow. So now that you're starting to learn the language, what story do you want your numbers to tell?